managing partner at Deepwater Asset Management. Gene, it's always great to chat with you. But on a day, past couple of days where some are wondering about these headlines, how do you, as somebody who is an analyst who looks at these stocks and companies, how do you sort of think about all these headlines of guarantees, of commitments, of money not yet spent? We don't know what the ROI on all of this is still.
I mean, you hit it right there, the money not spent. And there's this disconnect between what the headlines have said since September 4th and Zuckerberg's comments at the White House about $600 billion. And then you adjust that for the hot mic. And then Susan Lee's comments at Goldman, still 45% CapEx growth. You look at what OpenAI is talking about with CoreWeave, what they're doing with Oracle. All these, whether it's Meta's comments or CoreWeave or what's going on with the Oracle announcement, and also the OpenAI and Oracle tour that they had in Texas this week, is all about things to come. And I think that the market is really telling us that ultimately they want to see some substance around this. They are impressed at where we've come, but for this market to move higher, I think they need to get greater credibility. And let me frame that just in a slightly different perspective, is that if you take what has been said by these companies over the past 3 weeks at face value of where things are going, the market and these companies in particular should be, I think, measurably or dramatically higher. I think that the market is heavily discounting this type of growth. I just want to put one kind of metric around what it all ultimately means, is that next year CapEx for Meta or for Google, Amazon, Microsoft, call it plus 7%. If you play this in, what we've heard from these companies over the past few weeks, you should see CapEx growing closer to 50% for the next several years. And so massive disconnect there, Melissa, and understandable given where we are from where the market's at.
So do you think that the discount that we've seen being put into some of these stocks, Gene, is adequate? Especially because it's not just the asterisk to growth. There's another asterisk in terms of the bottlenecks, the external bottlenecks that this growth could face, like power, for instance. Let's say there was a demand for all this capacity and there were the dollars spent on chips and infrastructure, et cetera. There's still money that needs to be spent on generation, on power, and all of those things that we may not be factoring into these eye-popping numbers.
I'll come back to this. All has stuff on the come here, Melissa. We got to build the power. We got to build the infrastructure. This is all things on the come. And I think that that's what the market's having a really hard time digesting, is that the power needs of this, the compute, NVIDIA, great news for NVIDIA over the past several weeks. The stock's up 1+%, NASDAQ's flat. I think it all comes back to this concept of just the unbelief about where we ultimately are going. And I think that that's, I would put just a slightly different perspective on it. This unbelief around this is that if we look at the comments from OpenAI this week and just zero in on that, we look at what they've done to their revenue outlook for calendar 30. So we're still 5 years away. They've raised that from 175 to 200 billion. Everything we're hearing from these companies is that those numbers are going to continue to move higher than where I think investors are at. And it is understandable, given what you just described at the infrastructure build-out level, what's needed. But ultimately, that is going to come to fruition. I think this spending, whether it ends up being 2028 or 2032, I think it's relatively a rounding error. The big news is that our lives are going to be dramatically impacted by AI, and these companies are going to benefit from it.